Hello friends, in this video we are going to talk about an Excel formula called $DE. This formula is again a very useful formula. It is used in pricing US Treasury bond quotes which are priced to the nearest 1 by 32 of a dollar. Now it may sound a little bit confusing. Before we understand how the US Treasury bonds are being quoted, it will be very difficult for you to understand what this formula does. So let us first go to the US Treasury page and try to understand how the bonds are being quoted. From there, you will be able to correlate it with this formula. So I am taking you to New York Fed page. You can see. So here is the New York Fed.org page is there, which is the Federal Reserve Bank of New York. And in this, we are at this tab, understanding US government securities, how they are being traded. So let's go a little down, and here you can see a typical quote of US security is being given here. Now in this security, you can see the issue price is being given, means what is the security. Issue price means here it means what is the security which is being quoted. Then you can interpret it how it has been mentioned here. So this security is 6.5% security, and the maturity date of this security is 15th of August 2005, and it is a note. Now note is a debt instrument again, and we are not going to discuss it into detail here because we will be deviating from the topic, but you can understand that it is similar to bond, and it is also a debt instrument which is floated in the market through which the companies raise the funds. Now the quote for this bond here is 105.08 and 105.12. This is not only 12, this is 105.12. As per market convention, they doesn't write the initial big figures, so it is 105.12. Now, as a common man, we might interpret it as that it is $105.08. But no, it is not 8 cents. It is 8 by 32, because here the prices are quoted in 32 cents of a dollar. So 1 by 32 we have to use. So here if it is 8, it should be 8 by 32. Let us try to understand it further in detail. So for that, a very beautiful explanation is given here in this 2 paragraphs. You can refer to it. Now let us first try to understand the first one. So note and bond prices are quoted in dollar. Note and bond prices are quoted in dollar and fraction of a dollar by market convention. The normal fraction used for treasury security prices is 1 by 32. Okay. Now let us try to understand it by an example also. So in this example, you have seen the bid price of the security was 105.08. 105.08. It means $105 plus 8 by 32. Why 8 by 32? Because here we are using this convention. Okay. So now this 8 by 32 has to be converted to get the exact price of the bond. And the exact price of the bond, which is worked out here, is 105.25. This 8 by 32, when you divide it, it will fetch you 0.25. So exact price is 105.25. So even though you can see that the market is quoting at 105.08, but the price in dollar terms is 105.25, not $105.08. Similarly, we can take another example of the ask side also, so that the concept can be very clear. So in the above example, 105 is the whole dollar amount and 12 stands for 12 by 32. 12 by 32. So when you divide 12 by 32, you will fetch 0.375. So the actual price at which the market maker is willing to buy this bond, willing to sell this bond, sorry, is 105.375. Correct? Market maker is willing to buy this bond at 105.25 and willing to sell at 105.375. But in the quote, you will find 105.08, 105.12. So you have to divide these after decimal places figure by 32. Now let us come back to the formula and understand it. So this $D formula, it helps in converting a dollar value in fractional notation into a dollar value expressed in decimal notation. $D will divide the fraction part of the value by an integer specified by the user. So as we have seen in the previous case, there the integer is 32. So there the dollar value is to be divided by 32 to arrive at the exact decimal notation. Here again one example is given. If you want your price to be expressed to a precision of 1 by 16. So instead of 32, if you want to use it for 16, then you divide the fraction part by 16. In this case, 1.02 represents 1. This 1.02 represents 1 plus 2 by 16. So 2 by 16 is 0.125. So 1.125 will be the exact price of the security. Now we can use this formula. So here you can see a security's bid price is 1.02 and ask price is 1.1. And let us assume it is 32. Let us assume 32. This is another example only. You can simply go through it. So use the $D formula. You can get this formula from this function tab. The fractional dollar value is 1.02 and the fraction is expressed. You can read here, fraction is the integer to use the denominator of the fraction. So fraction, this 32 is going to be used in denominator. So the value is 1.0625. Similarly, for the second one is 1.3125, which can tally from this also 1.3125. This first one, why it is not telling? Because here it is 16 is used, we are using 32. So if you change it to 16, you will get the same price. So I hope you are now well versed with this formula, and I hope I have added value to your time, and thanks for watching.